Mediterranean restaurant company Cava Group stock price is down 30% in the last 6 months. And of course, I'm disappointed in that because I had that stock rated as a buy for the last several months and the stock price is underperforming, which is disappointing to be sure. Investors are asking me, what do I think about the company now after the lower price, after the disappointing results in the most recently completed quarter? What do I think? I'll answer that question here in this video and update my buy, hold, or sell rating on this fast-growing restaurant company.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So zooming out and looking at Cava Group's revenue growth in recent years, it's been increasing nicely from 500 million in 2021 up to 1.1 billion in the most recent trailing 12-month period. Cava Group has less than 500 locations open, and the management team believes the company should have more than 1,000 locations open by 2032. The company disappointed investors in the most recent quarter, reporting same-store restaurant sales growth of just 2.1%. But analysts pointed out that it was a difficult comparison from the same quarter last year, where they introduced the new steak product that really increased consumer demand. And so it was comparing this year's quarter with last year's quarter with that new product introduction. And so that's what created a difficult comparison in the same-store restaurant sales growth, disappointed investors. Still, if you look at restaurant level numbers and compare them with one of the best performing restaurants like Chipotle, Cava Group's numbers are really impressive, and that's fueling growth and growth ambitions and investor excitement about this company longer term. Now, this company does not, I repeat, does not operate on an asset-light business model. This is actually very asset intensive because the company owns the locations they're building, and so it requires a lot of capital to open each of these new locations, which slows down growth and makes the business more risky. However, it's the same model that Chipotle utilized, and I compared this company with Chipotle a lot because Chipotle is like the standard bearer of excellent performance for restaurant companies in the recent, I want to say decade, since the outbreak, the E. coli outbreak. Chipotle has recovered really, really well, but it's facing some challenges since Brian Niccol, the CEO, left for Starbucks. Regardless, Chipotle is one of the best performing restaurant locations, and Cava Group in its early days is outperforming Chipotle. So that's what has me excited and has a lot of investors excited. The operating cash flow to sales ratio has improved from negative 1%, or I should say just 1%, up to 15.9% over recent years. And the return on invested capital has increased from 2.6% to 14.4% in the most recent period. And since this is still very early days, the company is not yet fully utilizing economies and scale. It's impressive to be delivering these levels of performance metrics. But let's look at valuation. And as I mentioned, this company is outperforming one of the best restaurants in the world, and investors have seen that. It's no secret, and its valuation is expensive. It's trading at a forward price to earnings of 99, but this is the cheapest you've been able to buy Cava stock all year long here in 2025. I calculated a fair value for this stock utilizing my discounted cash flow valuation model, and the fair value I calculated and updated today is $155. The current market price is $60 after the big decline in recent months. So today I reiterated my buy rating for this company. Now, this is an above average risk stock, and so this should be not for risk averse investors, but investors looking for higher risk and higher return potential. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.